I had a question today on rollover liquidity, and I wanted to go over that because it was a good question. And you see over here on the left is the December 2016 E-mini S&P. Over here on the right is the March 2017 E-mini S&P. And you see the order book. These are the bids and the offers right here and for the December below the chart. And over here is the order book for the March 2017. So the volume on December so far today is 1.7 million, and the volume on the March is 670,000. So roughly 3 times as much. But the reason we're trading the March, the second Thursday of the month is the traditional rollover, and so we're not as concerned about the total volume traded as we are the order book. And so the order book is very liquid. You're able to transact most your contracts. You see a little bit of a gap there, a little bit. Sometimes there's a space in between. But overall, I don't think you're going to see much difference on your liquidity of your execution. Pretty thick order book. So I don't know of anyone that's struggling to with the liquidity of this order book. So most people out there are trading less than 10 contracts. And so each one of these represents contracts offered or contracts to sell. So you should be okay on the March 2017 contract. Again, it's the second Thursday of every month. Another thing I want to show you is the market depth indicator that I have. This is the sum of the market depth. It sums up all these levels, all the bids and offers. And you see there's 8,000. It's changing so fast I can't, it's not going to stop for me. So it's around 8,000 offered to 7,600 bid, and over here you got about 5,000 offered to 5,000 bid. So the total bids and offers book, it's a little bit more than twice. It's a little bit more than half as much. It's not quite twice as much on the December. So yeah, there is still some more volume liquidity on the December, but we want to be in sync with the contract. You can still trade December if you want for the next day or two to whenever that volume rolls over. But we want our future results to match the historical results when we look at the @ symbol. And so when we look at the @ symbol, let's go and take a look at the @ symbol, @ES. See in the blue ribbon at the top it says March 17. And so we backtest this based on the @ symbol and the rollover. And so this is when it rolls over, and we want to be in sync with that. And so we roll when the @ symbol rolls in TradeStation, @ES, the @CL, the @GC, whatever it is, we roll when the TradeStation symbol rolls, and we just track these continuous contracts. And in general, the second Thursday of every month, not every month, but on the quarter, is when you roll the stock index futures. And so today is rollover day. You might see more volume today, but I think tomorrow you'll start to see more volume on the March. But I'm going to show you these indicators. The reason that you see the squiggly line, I've had this on all day, and I just added this indicator for the video. The market depth data is not historically recorded in TradeStation, so you don't have access to backtest strategies based on this market depth unless you were to somehow record it going forward and then use that data. It's one of the projects that I'm working on. NinjaTrader has Market Replay, and I've been downloading Market Replay, and I've been creating scripts to replay the data and write this market depth data to a text file, and then get that data into a chart, and then backtest a bunch of algorithms, and then make sure that our real-time algorithm matches what the static algorithm data would be. But that's a different discussion for a different day, and may seem complex, but don't worry about that, because the main thing I wanted to tell you about today is to just take a look at the overall order book, and today is rollover day for stock index futures.